Hi, my name's Moses, and I'm the lazy frugal millennial. Today, I want to go over the frenzy that's been going on around GameStop, Wall Street Bets, and Robinhood. And I guess this is also my 100 subscriber special. I didn't think I would get to this point this quickly when I was procrastinating work in my office 2 months ago. But I've really enjoyed making these videos, and I hope all of you enjoy watching them too. So thank you for subscribing to my channel. Before I go over anything, I need to preface this by saying that none of this is financial advice and you should not make your trades based on my video. And for full disclosure, I currently own shares or options of GameStop, American Airlines, Nokia, Blackberry, Airbnb, and Express. These are all just my opinions and not trading advice. Please do your own research before trading. To understand what's going on, we first have to look at the history of investing. Historically, stock trading and investing was really only reserved for wealthier individuals and families, and the clearest place to see this is when looking at the big investment banks. The average account size with Charles Schwab is between $300,000 and $400,000. And at JP Morgan, while you can start investing with $1,000, most of their investment tiers require a minimum investment of $500,000 or even over $1 million. And for most hedge funds, their minimum investment is over $100,000. Brokerages, hedge funds, and investment banks have all served as the gatekeepers to investing for decades. And on top of that, you would have to pay a $5 to $10 fee every time you bought or sold a stock. If you're investing $100,000, then $10 is a rounding error. But if all you have to invest is $100, then paying a $10 fee just to get in the door means that you're losing 10% of your money before you've even started investing. Unfortunately, this is why a lot of people still believe that investing is only reserved for the wealthy. But then Robinhood came out in 2014. Robinhood's mission was to democratize investing for all, and I would say they've largely accomplished that. Robinhood has no account minimums, and you can invest in almost any stock you want, starting for just $1 thanks to fractional shares. Robinhood also doesn't charge any fees to place trades, which has now become the industry standard thanks in large part to Robinhood. Robinhood has really brought investing to the masses, and that's clear when you look at their average account value. It's only $5,000. That's 80 times lower than Charles Schwab. At this point, I'm sure you've heard of Wall Street Bets on Reddit. This is basically a group of millennials taking huge risks with way too much money. And sometimes they make a lot of money, but most of the time they lose a lot of money. A lot of these investors talk about YOLOing their life savings in stocks or options that they think are undervalued, and the platform that the vast majority of them use is Robinhood. I've followed Wall Street Bets for over a year now, and I've even bought into some of the meme stocks that they've talked about. About half the time I make some money, and about half the time I lose some money. But I never YOLO more money than I'm willing to lose, which is really the key to the whole thing. This is gambling, plain and simple, but rather than going to a casino and betting your money where the odds are stacked against you in favor of the house, in the market, you can do some research and find information and potentially stack the odds in your favor. Wall Street Bets has been a joke about losing money for years, but this month, Wall Street Bets has shown its true power. As of today, on January 28th, Wall Street Bets has 4.9 million members, and that's up from just 1.7 million at the beginning of the year. Playing around with some ballpark figures, let's assume that half of these people are invested, and let's assume that they have the average Robinhood account balance of $5,000. That means that Wall Street Bets potentially controls over $12 billion. That puts them among the top 100 hedge funds around the world. While this number is purely speculative, it's potentially a lot higher, especially now with stock run-ups. Wall Street Bets' scale and power is being shown on GameStop, and it's making headlines around the world. I'm not going to go into too much detail over this because there's already tons of videos and tons of articles about this. But briefly, Melvin Capital and Citron Research took out massive short positions on GameStop, which means that they're betting that the stock price will go down. What they did was borrow a bunch of shares of GameStop, sold them immediately, and they're hoping to buy them back at a future date for a lower price. That's how you profit on a short sale. But Wall Street Bets users looked at GameStop and saw a different picture. They saw the potential for a short squeeze. If you wasted your money on a college degree like I did, then you're familiar with the supply and demand graph. Demand for GME stock outpaced supply, forcing the price to go up. The squeeze part of this happens when short position holders are forced to close their positions and buy back shares at any price that they can so they can give the shares back to their lenders. In theory, if enough people buy and hold on to GME shares, that's going to keep pushing the price up higher and higher as hedge funds get more and more desperate to buy shares at any price they can. Personally, I've multiplied my money in GameStop. I've cashed out my original investment, and now I'm just playing with my profits. It's kind of like going to a casino and doubling your money betting it all on black, and then just playing with the house money. So if I make any money, it's basically free money. And if I lose any money, it's too bad. But there's a lot of signs showing that there's a real war going on Wall Street between new money millennials and old money billionaire hedge funds. Now, all of this is highly speculative, so please do not trade based on my video and don't sue me, bro. In the last month, Wall Street Bets has gone from some fringe group making crazy bets to becoming a force to be reckoned with. Melvin Capital has about $12 billion in assets, and if you remember my ballpark figures, that's potentially less than what Wall Street Bets controls. Through Friday, January 22nd, Melvin Capital was down over 30% year to date because of their short positions. That's potentially a loss of $3.6 billion. They had to get bailed out by Citadel and Point72 to the tune of $2.75 billion just so that they wouldn't face a margin call and go bankrupt. And since then, GameStop has gone up another 700%, although today it's down to 400%, but we'll get to that later. These huge hedge funds are just bleeding money because a whole bunch of millennials with a free trading app on their phone decided to take them on. But GameStop is only one of the many stocks that is getting shorted by hedge funds and run up by Wall Street Bets. The list includes AMC, American Airlines, Express Clothing, Blackberry, and Nokia. Hedge funds are bleeding money, and they're getting really pissed about it. And they're putting a lot of that blame on Robinhood for enabling it. In case you haven't heard, Robinhood is planning an IPO for some point during 2021. But in order to make an IPO happen, they need the help of hedge funds and investment banks to go public. So today, on January 28th, Robinhood blocked their users from buying any new shares of GameStop, American Airlines, Blackberry, Nokia, Express Clothing, or AMC. And on top of that, you can't even search for those companies on Robinhood anymore. The only thing that you can do with those stocks is close out your positions and sell your shares. Since there's no demand for these shares coming from retail investors on Robinhood, most of these shares are likely being bought up by hedge funds trying to stop the bleeding. Robinhood is justifying this by saying that traders don't know what they're doing and have to be protected. Because of all of this, a lot of these share prices are tumbling today as people are panicking and selling their shares, and hedge funds are taking advantage of that by buying up shares at lower and lower prices. You remember how I said Citadel and Point72 poured money into Melvin Capital to keep him from going bankrupt? Well, I found out something interesting. It turns out that Citadel is one of Robinhood's main partners for actually processing transactions that happen on Robinhood. And Robinhood did just so happen to stop trading on these heavily shorted stocks today. So I'm not saying they're colluding. I've been seeing a lot of articles in the mainstream media talking about how these traders are idiots and don't know what they're doing. But I would venture to say that they know exactly what they're doing. They're taking on hedge funds and beating them, and hedge funds are getting scared. With the rise of trading forums and democratized investing, everything I learned at business school is now twice as useless. All the old trading strategies and analytics are pretty much ruined now that you have to factor in what Wall Street Bets is going to do. I think that in this decade, we're going to see the power shift away from the big established Wall Street banks and into the hands of everyday retail investors. The Wall Street Journal is not going to report on what JP Morgan has to say about the stock market. They're going to report on what Deep Value has to say about the stock market. But right now, there's still over 100% short interest on GameStop, and there's still tremendous short interest on all the other Wall Street Bets plays. So you know what? I'm holding my positions until we go to the moon and beat hedge funds at their own game. For years, we've seen headlines that millennials are killing the housing market, or millennials are killing the diamond market, or millennials are killing the baby market. The list of industries that millennials are killing include cereal, casual dining, department stores, luxury goods, cable TV, golf, and pet food. But I think it's time we add yet another one to the list. Millennials are killing hedge funds. We no longer have to pay fees to portfolio managers whether they make us money or not. We no longer have to pay fees to place trades. We no longer have to have account minimums, and we no longer have to buy full shares. We can now trade stocks from an app on our phone while we take our morning. Thank you for watching my video. If you enjoyed it, then please like and subscribe to my channel. Tell me your positions down in the comments. Don't forget to drink your water, and I'll see you on the next video.